All right, guys. Welcome everyone to the 11th community call dedicated to Atomica liquidation markets. And today we have a lot of great news for a community to share. We have already shared all this news in our media. So today we want to to answer the questions we have from the community side. So I can quickly make a review about our recent huge updates. So the main news that is we have successfully released on mainnet. So right now it is possible to supply some DAI to a pool and start profit from collateral liquidations, and in the same time to be a backstop for a MicroDAO ecosystem by bidding at healthy rates to prevent Black Thursday-like events. And to get access to the app, you can follow the link to an app and request the access there. Currently, the participation in pool is limited to 25K DAI. Currently, our contracts are not audited yet, so to ensure that the assets are safe, we did such measure. So currently, we reach almost half of our caps, so feel free to join. Other great news that we released a new website where you can study about a company and the team and to see what other products our team is building. Also, we updated all our documentation, so you can dive into in more technical details of liquidation markets. Also, there are sections of risks and security, so you can elaborate on these things as well. Also, we published our code in GitHub. Also, you can follow the link above below the description of the video and to see the code. So that's our huge updates from our side, and we are looking forward to get the feedback from the community. It's really important to us to understand where we should have focused on to design a better product for you. Currently, with this release, our bot is participating only in Ether and at ETH auctions. And currently we are working on adding WBTC and BOT as next collaterals to liquidate. Also, as we can see from market conditions, that the market is flat and bullish for like recent months, and there are not too many active liquidations. And to mitigate such a risk, we also are working on integrating money markets on our lending protocol like Compound, Hour, or any other which our team and community will decide is better to proceed to provide some sustainable returns in such periods. So that's our main focus right now. And also we are working on adding of new collateral platforms. We are considering among the few popular ones and investigating the opportunity where liquidation opportunity is much convenient and effective for us. But also it's an open to community question. Also at the app website, you can see the survey where you can define and help to define what should we build next. So feel free to share all these comments. And as an agenda today, I suggest to have a Q&A session from a community to see what are the comments, suggestions, questions regarding our mainnet release. It's really interesting to hear feedback, which is important to us, what I mentioned. And then we can discuss about other markets that should we build next, and any other open questions that anyone can answer here during the call. Hey. So I suggest to start. Does anyone here from call participants have a chance to try a product, to provide some feedback, questions, or if you didn't have a chance to try?
Yeah, I have two questions. One is, could you give a quick overview and share the screen with the state of the market? And the second one would be, I have a question about oracles, but let's start with the one at a time. The state of the market and what did we learn about the bidders, the competition, right? Discounts that they were bidding and so on.
Okay, sure.
Maybe you can share a screen with, if you have a screen to share, with bids, and the state of the market, basically, like quick overview.
I can provide an overview, like in words. I mean, because I don't have like gathered information, but we were actively observing the current bids, and we have this question from community, and also we discussed this with Andrew before a call has started. So basically, after our release on mainnet, there were like 6 or 7 auctions, and we haven't participated in any because current lot sizes are like very small. The highest lot amount was almost 1 ETH, which is also very small. All others like 0.2 of ETH. That means that first of all, for such bids, there is a much higher competition, because of such capital, I guess, has like almost anyone in the DeFi community, and it's possible to make bids near market price. So all the recent auctions are like around near market price, and that means it's like 1-2% of discount, excluding all of the gas price expenses. We couldn't participate because our bidding strategy said not to participate, even though we decreased the minimum discount to 1%, considering the potential profit from such small lots. It didn't worth to participate, because even having like 10-20% of discount with such lot sizes, it won't be profitable because of high gas prices. So you will like spend a few dollars on gas prices, and you will like earn like $1-2, which isn't profitable. So we should wait more sharp and significant price decrease to make our bids. And also, I mentioned to Andrew, to mitigate this risk, we are working on integrating of lending protocol like Compound and Aave to have some consistent yield, which also not very high right now. But it depends on the protocol. So to provide some sustainable interest for our liquidity providers in periods of like such market conditions where there are a lot of active auctions. So that's basically the market state overview for like recent auctions. And actually, such liquidation market trend is like from for a few months, and if I'm not wrong, there was some significant market price decrease in April or beginning of May, and still there weren't a lot of active auctions. So this basically is the state of liquidation market of MakerDAO right now. Maybe if we want to dive into of the details of our business strategy, why we didn't bid, we can also elaborate on all of these points if it's interesting. So yes, is it an answer for your question or not?
Yes, thank you. What kind of input parameters govern the bids? Like, what is the triggering the bid exactly, and how and what does it work? What triggers the bid, and what are all of the infrastructure that the system consumes from the outside, right? From other contracts, from off-chain data feed or whatever. What are the things that can that make the contracts submit the bids, right? And how do they work?
Okay, it's a good question. I can elaborate on this. So basically, the bids triggers our risk oracle, which is off-chain bot that performs like the next functions. First of all, it tracks all the active auctions and define like the timing where we can bid. The next, when the right timing according to bidding strategy has come, we are the bot is trying to estimate according to the current min max discount rate whether it's profitable for us. So basically, we are gathering gas price information, and also we're estimating the price of overall lot size at Uniswap exchange. So we did some modification here. Initially, we were estimating the price per 1 ETH, but we did this modification to have more relevant information, because we have to liquidate this collateral at the exchange. So after this estimation of gas prices and potential lot price at the exchange, it tries to make a bid, and if all the conditions for bidding strategy are met, our keeper bot, which is a contract, makes a bid. But for recent 6 or 7 auctions, these conditions were not met, so we didn't make bids.
Okay, and what the risk oracle? What exactly? What are the components, and what does it do? What are the inputs and outputs?
As I mentioned, the risk oracle estimates gas prices.
From where?
If I'm not wrong, it's gas station, but maybe Elena, you can correct me if I'm wrong.
That's absolutely correct. The risk oracle checks the gas station and the gas prices, and then decides if it's a bit profitable from the point of view of the current business strategy or not. So it triggers the transaction, then calculation in the smart contracts performed, and after that, if it's not profitable bid, there is no transaction at all. transaction is failed, and if the gas price is acceptable and the other conditions of the auction is acceptable, I mean they meet the requirements of target discount, the bid take place.
Yes.
Okay, so inputs are Ethereum gas station. Is it API?
Yeah, that's
Okay,
off-chain API. Yeah.
Yes. Okay. As far as the price, there is nothing about it. It's basically the amount of debt, right? Or what exactly? What other parameters? And is there an external data feed about this?
About what?
About, no, for example, let's say, what if the price where this could be sold at is way below the bid price? Meaning that, for example, the price on 1 inch is 230, right? And the current bid is 245.
Mm-hmm.
Okay.
Does it consider that yet or no?
Yes, sure. That's considered.
So how does it get the price? When, how often, and so
Because we get, there are two ways to get this price. The first way, we can get on-chain price when we do the transaction, and there is possibility to check this price off-chain. And of course, as we use the 1 inch, we consider the 1 inch price, but also check the Uniswap price to see how much this lot can.
worth. Understood. What does it do now?
Now it checks on-chain state, on-chain price. So the off-chain part checks the only gas price.
Okay, understood. And on-chain, how often does it do it? Is it when it makes a bid or what?
When it makes the bid.
Okay, so it's a transaction that checks the price of what? Of the 1 inch?
Yeah.
Okay. Understood. All right, that's fine. Thank you very much. Got the point.
Okay. Okay, so let's move forward to the next question of the agenda, and it's questions from the community side, whether if anyone did have a chance to check the app. If no, but maybe still someone has any questions, it would be great to hear from
Vadim,
you.
Vadim,
Yes.
I have a question.
Sure.
Are you kind of bound by some kind of a contract with MakerDAO to bid not less than 30% at the current levels of the Ether price? I mean your grant. As far as I know, you received a grant from the MakerDAO. So are you bound of an agreement or something?
Mm-hmm. Currently, yeah.
From my point of view, as an investor, I'm interested to buy as low as possible.
Yes, good question, though. I can answer. So currently, we do not have any agreements with Maker, and currently we haven't applied for a grant yet. And for also, we are planning to launch a separate backstop pool, which will focus only on this purpose and make sure that the debt is covered at MakerDAO ecosystem, and also it's flexible. It's not finalized yet, but also it may have some profits from liquidations, even for backstop. As for profit pool, which is focused to make pure profits for liquidity providers. Yeah, yes. So currently considering the competition, the minimum discount is 1%, but depends on market states. Our maximum discount right now is set as 30% of discount. Yeah, is it an answer for your question?
As far as I got you, the maximum is 30%, and you said
Yes,
about the second pool. And what about the second pool? Is it
so
how it works?
it's not implemented yet. We are working on it, and also it's not a final concept, but the idea is the next. So if there is any bid at the current auction that covers a debt, this backstop pool wouldn't make any bid because the main goal is to have to make system stable. So if the debt is covered, there is no job for backstop pool. But if considered the current auctions and all the keepers, they made the bids that are not covering the debt, that have a very huge discount. In this case, this backstop pool will make a bid of 95% of current market price. So basically getting 5% discount. But also this 5% is flexible, depends on the backstop LP's needs. So it could be adjustable. It's just like our vision that may be convenient for MakerDAO stakeholders. So, but it could be adjustable in both ways.
Thank you. No other questions.
Okay. Are there any other questions as for products or vision or any other questions that you may have? Okay, but still, all the questions could be asked in Telegram chat or any other way which is comfortable for you, where Atomica has a media account. So feel free to reach us, ask the questions, provide comments, feedback, critics. Any comment is like very highly appreciated. So let's move to the next question. So I suggest to discuss like two questions which are also open through the survey I mentioned. So it's where the assets should be allocated in period of low volatilities to earn some interest while idle. I already heard some dots from Andrew, which may have some risks. So basically, there are several options to have a passive income. So basically, it's compound and Aave, and DSR, which offer passive income with relatively small risks. Also, we can supply assets to some robo advisor like Ray, which offered by StakeTas, and Idle, which make rebalances depends on a more higher yield among the protocols which are supported by these products. Also, it's still possible to allocate assets to more riskier protocols, which are not like lending themselves, but something like Balancer, Uniswap liquidity pools, something like open hedge contracts, and so on. So surely current our approach to find the balance between security and yield which so among the leaders it's Bound, Ave for this job, but it's also to hear some thoughts and feedback from community side, which is important for you, like security, high yield, very high yield, or it doesn't matter. So, Andrew, Renat, any other, what are your opinion about this?
When it comes to these various destinations, right? Which ones are probably like, the question might be interesting to get feedback of community is which ones are growing in size or selection of the assets and risk reward profiles, right? And likely to grow the fastest, so that if there is one integration that is done, right, so it meets the needs and expectations of majority of liquidity providers when it comes to the pool participation. What's the top priority? Andrew, what do you think? Like, what would be the
security? The top priority is security.
I'm talking about like which investment income yield booster, right, that you would like to prefer in order to get and allocate to the pool. Basically, right now there is no auction activity, right, that generates yield from the primary auction participation, right? So if we were to add the yield generation on something like compound, what would this be? Would it be compound or would it be something else? Where would you be happy to have your money generating yield in order for you to allocate to the pool?
I can explain. Right now, me and the partner earn about 20% yearly, making arbitrage on different exchanges, like shorting. It depends on the exchange, but you can short any Bitcoin. Or now Ether is much more preferable because it offers much greater yield. So you can earn about 20% yearly. If you can offer more, and taking into account all the risks associated with the smart contract, because the risks are at the exchanges as well, because you can suffer from a congestion. You might not be able to add more funds in case crypto is bull running rapidly. So from my point of view, if you can make 40% a year, it would be great. But if you can make 20% a month, that would be awesome.
Okay.
From liquidations.
Yes, but we need the liquidations to first, right?
Yeah. Actually,
it's not a big deal because now it's the price of crypto is wedged, is jammed. I'm expecting a breakout soon. Either way, if it's down, you'll get a lot of liquidations. Renat, I was thinking about earlier today. You told about renting. Taking a credit at 0%, at 0.5%. Mm-hmm. From my point of view, I'm expecting crypto to go up in the long term, and I wouldn't like to sell my Bitcoin into DAI and invest DAI into projects. So into your pool. I was thinking about opening a vault at 0.5% or any current, and making a good looking forward like placing 300 ether to get 100 DAI with a good buffer, with a good enough buffer in case the price goes down, and putting this DAI into your project. And if your project if your pool earns more than I would pay for creating a vault, for me it would be economically feasible, profitable. You understand? You understand my point of view?
Yes.
So you have two goals: much higher than 20% in yearly terms, and higher than the current rate at MakerDAO for creating a vault.
I can elaborate on this question because we already had few questions in Telegram and Twitter about what returns we can expect, and we have precisely studying what returns could be possible at MakerDAO, considering like this 7-8 month historical data. So basically, it's profits from liquidations. It really depends on, first of all, market conditions. So if, for example, like for the recent few months, there are now a lot of auctions in this particular periods, returns would be low. But if we can annualize all the results from the data analysis we did, it's like it depends on the many factors, but for one keeper we can have annualized returns from 20% to 120% of annualized interest. So it really varies, depends on many factors, competition and market state, but these are the numbers we can expect. But sure, there is no any 100% guarantees for any of these numbers, but it's what we can expect and depends on historical data.
Okay. Okay, understood.
Rinat, what's the current stability fee
0
at MakerDAO? 0?
Yes.
So you actually pay 0.5% to create a vault?
You pay, well, to create a vault, you pay transaction fee like, I don't know, 30 cents, 50 cents one time. To close the vault, about maybe the same. I don't know. Right now the gas is high, but it's just a transaction fee one time. So now you pay 0% in interest.
And 150% collateral ratio, right?
Yes, correct.
So I can make it 300 or 500% to be on the safe side. Create DAI and put it in.
Yes.
Put it into your pool. Yeah. Good news.
Correct. You can do it. Actually, it's a good idea for us to think about, to have something like this feature as an option. Oh, yeah.
Okay.
Okay. Are there any other questions from you or not, Andrew, or any other?
No questions.
Yeah, I guess we covered. Yeah.
Just the last one. Did you make any insurance with OPIN.
For liquidation markets, you mean?
Yes, for
no.
Atomica keeper pool. No?
No, we haven't done like any integrations.
Are you planning on any of these?
For which use case?
For example, against being hacked, against
you mean like insurance? Yeah. Okay.
Yeah, insurance.
I thought about put option as a to hedge like Ethereum price or like, but against insurance, about insurance, it's a good question.
Is it possible to be insured against any kind of failure, like being hacked, being the money being frozen for any reason, for any bug?
In open, they have more like this options use case. Currently, they support like compound only for DAI and USDC only. I don't have knowledge about their further plans, but currently it's like only compound and two assets, and it's not being covered all the risks. So basically, you have to have pool tokens available to get your compensation if some risk case occurs. So open. It's also it's in current implementations. I don't know all the plans, but right now you have to have the underlying asset to claim your compensation. So if for some reason you don't have it, you can't claim your compensation. So but it's a good question about the security and insurance. We are actively working on it, but currently there is nothing to share right now. We are working on it, and once we have some concrete information, we'll definitely share all the information to community for sure. Does this answer to your question, Andrew?
Yeah, basically, I think let's not count chicken before they are hatched. Let's see what the future offers us. My hunch is telling me you'll have a few bugs coming along the way, and until you fix them, until you get everything going, until you have a good track record for like a week or 2 weeks or a month, and if people see you are winning auctions and you're getting enough discount, and especially if someone is bullish on the crypto on the whole, they can create vaults and put your DAI. For example, my partner is not doesn't believe in crypto on the whole. He's holding all his assets in DAI or USDT, and it's a base currency, and he's making arbitrage operations, trades, basically in quoted in DAI or in USDT. he's not counting the profit in Bitcoin or Ether because he's not bullish on crypto on the whole. He doesn't see any intrinsic value in crypto, like in USD.
Well, sure, there are people that don't believe in crypto, but it's like small sample. But yeah, we should have track record.
Yes.
But what about what you
Well,
meant about bugs that?
Yeah, I think
we
that if he is not sure about intrinsic value, then it would be interesting to see what would it take. Like, would he be willing to allocate as a liquidity provider to these pool tokens, right? Which is an asset class that can help him profit exactly from his thesis, right? So his thesis is there is no intrinsic value. That means that it's only a matter of time, not if, but when.
Yes, right.
When
right
the price
here.
will
As soon
go
as
down and crash. So he can profit from it without shorting, without taking the downside risk. If the price started crashing for one or many of the crypto assets, right? Like Ether, Bitcoin, a lot of others, right? Anything that can be liquidated. Then he can profit from that, exactly from that.
right here. As soon as he sees the opportunity, I'll be the first one to offer him Atomica keeper pool, and I'll be the first one to enter myself.
Awesome, thank you.
And I think the bugs, just hypothetically speaking, I think the bugs you'll encounter will be mostly in your bidding strategy and out competing other auctioneers.
Well, it's not a bug. Sure, we would adjust some strategy parameters because market is dynamic.
Well, not a bug actually. Yeah. Just tweaking the strategy.
Yeah, so I guess we should distinguish like work in process of building strategy and like bugs, because sure we could be outbidded by competitors because it's market, and we will just improve our strategy. But I can't say that it's like a bug. It's like the work in process.
Let it be a bug in quotes. A figure of speech, okay? A figure of speech.
What do you mean figure of speech?
A synonym, a figure of speech. What else? Oh.
You mean it's a bug in a bidding strategy, or it's a figure of speech, right?
Yeah. Literary speaking, in literary terms, it would be a figure of speech. I didn't mean any bugs, any technical bugs.
Oh, okay.
I meant the competitors, because many of them would be listening to your calls, reading your Telegram chat, and seeking for any opportunity, any hole that can be exploited.
Yeah, that's a good point, and that's why we decided to use the modular architecture and don't have the bidding strategy together with all bidding logic in one smart contract. So we have three models, which are the parts of Keeper. The first module, the Keeper smart contract itself, it implements just business logic, as mechanics of auctions. The second part is bidding strategy itself, and the bidding strategy itself contains some methods which allows us to set the different parameters and to tune the strategy. For example, we started with one target return when we deployed the contracts in mainnet, and in a couple of days we changed the parameters by calling one of the methods, one of the setters of bidding strategy contract. And the third part of Keeper is the part which is responsible for selling collateral in the auction. That's also a separate module which can be tuned. For example, we can sell the collateral with some delay if we see that the prices are going up next couple of hours, next days. So for us, it means if we would like to tune the strategy, we have these special methods which allows us to change the parameters. And of course, all changes of the parameters, it's the question of DAO. Secondly, we can just redeploy the strategy, or we can connect a new strategy to the current keeper without the changing the pool and without the changing the main business logic of bidding. And this modular architecture allows us to avoid such issues when someone checks our strategy, understands it, and makes profits, and we are not. So this modular architecture is a kind of flexibility that we designed from the first version. Does it make sense, Andrew?
Yeah, it's a good news, actually. Can you explain, Elena, about, let me explain. Vadim, a few days ago, Vadim compared Atomica Keeper pool with a token set project. In terms of, anyone can create her own strategy, bidding strategy. Does it have anything to do with what you just said?
Okay, let me explain how does it work. First of all, we have the contracts, so-called factory of pools and factory of keepers. And this contract, it's the special contract which deploys the pool smart contract, the pool token smart contract, and the keeper parts. So it means that the pool manager, everyone who would like to run the pool, can call the method of pool factory and create their own environment and tune it as they wish. So they can, for example, change the parameters of bidding strategy. They can tune the pool settings, and they can, of course, tune the parameters of selling collateral. For example, in our first pool, we sell collateral on 1 inch. We believe that that's more efficient than to use, for example, just Uniswap. But if someone would like to use Uniswap or the other exchange to sell the collateral, even centralized exchange, it's absolutely fine because it's a separate module, and the pool manager just writes down the address of the smart contract, and we believe that the smart contract uses the same interface that we provide, and it works. It works because it's just a part of system and it's adjustable. So this modular system allows the pool managers to create their customized, unique pools with different purposes, starting from the pure backstop pools and ending to for-profit pools with proprietary strategy, off-chain strategy with separate oracles. That's because we have these separate components, these separate modules, and we are allowed to create the customized ecosystem for the pool managers.
Did I take you correctly? Are you going to shift the load of making decisions from yourselves to the end user?
Not exactly. If you speak about the first pool, in this case, Atomica is a pool manager. So we decide about the bidding strategy, we decide about the goals of this pool, we decide about how to change, not only we, but DAO, which represents us as a pool manager. But having this functionality as a pool factory allows everyone to create their own pools with their own rules. So for example, you can join the first Atomica pool if you believe in our strategy, if you believe that this pool will bring you return that you expect. And you also can join the other pools if you see that they are profitable, but they can be run not by Atomica DAO, but the others DAO. Or even you can run your own pool with your own strategy and attract the investors, the liquidity providers, and be a kind of one of one of the liquidators.
Okay, got it.
Thank you for interesting and good questions, Andrew. Thanks. Okay, so I guess we can wrap up. We did cover interesting questions, including market state. So thank you everyone for participating. We encourage you to try the products, and we are highly appreciate if you could contact us and provide any comments and feedback you have. This will really help us to design a better product. So yes, we are waiting for market decrease and some liquidations. So thank you guys.